What's up, everybody? Matt Faircloth here, coming at you for my live Chats with Matt session. This is something we do every Friday, guys. Every Friday. Be here, be square. Fridays at noon Eastern Standard Time, live on the DeRosa Insiders page, live on the DeRosa page on LinkedIn, and live on our awesome YouTube community. So if you guys want to be connected to all the cool stuff that we do here with our live sessions with DeRosa, you guys need to take a minute right now and join our Insiders community. Insiders is a great spot to go and network with other investors. Somebody just posted the day that they're trying to connect with somebody in Chicagoland. It's great. And somebody else responded, "Hey, I'm here. Give me a call," and everything like that. So it's a great spot to get connected with other investors, to connect with the DeRosa team. We're going to be rolling out some other cool stuff that you guys can get involved in by becoming our Insiders communities, and especially maybe even site tours of our properties and that. So take a minute right now, join Insiders. I just put the link out there for you guys to go check it out. So join DeRosa Insiders on Facebook. Okay. Now, for those of you guys that are looking to add value to DeRosa, you guys want to get some free stuff. You guys want to get some free things of value. You guys want like DeRosa toys, DeRosa tchotchkes, DeRosa, fun things for you guys to use that have DeRosa product on it. And who doesn't love free? You guys can go to DeRosaGroup.com and go /swag. Okay. You guys can go ahead and grab that. I'm going to also, there's that. Okay. Let me post that out there. Get free swag. It'll take you maybe 30 seconds, maybe a minute to go ahead and do one of the 4 to 5 tasks you can do on there. So this is a screenshot that you did it. Just fun stuff like review my book, those kinds of things. You guys do that, you'll be able to get some freebies from DeRosa. Another quick way you guys can get some DeRosa swag is free stuff from DeRosa right now is to join me live. There's the link right there. Okay, come on and join me live right now, and you guys can pick my brain, ask some questions, talk some real estate shop. So I got a surprise guest for you guys today to come and talk to you guys about some real estate stuff. You guys know him, you love him. Here's my business partner, the man with the plan, my man that don't take no muss from nobody, my man Hervé Francois. There he is. What's up, Hervé? How are you today?
Good morning, Matt. Appreciate you, man. Thanks very much.
Man. Appreciate you, brother. Good having you here.
Yeah, man.
Hervé's joining us because I asked him to, because I thought that there was a shot that Matt was going to have jury duty today, doing my civic duty as a citizen, right? So we got to pay freedom ain't free, man. We got to pay our duty as citizens. So I was willing to do it, but it got canceled. They did not need me today, so I didn't have to do it. So Hervé was lined up. So you know what? Come on in and chat with me anyway.
Yeah, man. Let's do it, man. We had a heck of a week this week. Man. Absolutely.
We most certainly did, man. We most certainly did. So I'm going to let y'all take a minute to click on that, but I want you guys to do, because I want to show you guys something really cool too. Hervé, I'm going to show them the I already got people. Okay, we got Jonathan Nichols hopping in. If we get a minute, Hervé, I want to talk about the market tool that you developed.
Yes.
Yeah. But what we'll do is I'll grab that. Nibiku, if you can do me a huge favor, can you send me that market tool to my email inbox? It'll be just top of my email, or if you're able to private message it to me here in this channel, if you can. But get it to a place where I can pull it up and screen share it, okay, without having to sign up on the website. But I'll wait for Nibiku to do that for me. But while I'm waiting on that, I'm going to go ahead and bring in our first guest, Hervé, because we got a guest already signed up here. If you guys want to click that link, you can join it and get in the queue. Don't forget, guys, if you guys join us live, you get some real estate questions answered, and we'll also send you guys some free stuff in the mail. So, Jonathan. You are here. Well, Jonathan Nichols, man, welcome. Can you hear me?
Yeah, Matt, how's it going?
I'm good, man. I'm good. Welcome to Live Chats with Matt and Hervé on Friday, man.
Awesome.
That rhymes, Hervé. Chats with Matt and Hervé on Friday.
So yeah, it's meant to be. It's meant to be. Exactly.
Yeah.
Is this a new thing or something y'all been doing for a while?
Just a call. We've been doing it for about 5-6 weeks now. But
okay.
It's picking up steam. Everybody seems to be enjoying it. We're getting a lot of good momentum.
Sure.
On it, and so we've been doing it for the last couple of weeks. Did you come in off of YouTube, Facebook, or LinkedIn?
LinkedIn.
Awesome. Okay, so make sure you join our Insiders community, because that's our live free Facebook community. that we
Cool.
do. There's some other stuff that happens in there too. Sometimes we'll post deals. We're talking about doing a boots on the ground site tour. It should be fun. We'll be putting that out in the Facebook page too. So we are in service to you, my friend. Our brains are here. Pick away. What do you want to get into?
Wow, that's super cool. I'm surprised I'm like the first person that jumped on, but I guess lucky me,
You're
right?
first today. We'll normally get
Yeah.
few of folks coming through.
Well,
But,
I don't know if you remember me, Matt. We met at Dealmaker Live when you spoke there. I guess it would have been not this year, but last year. I'm a coach, and
Okay.
I'm actually a coach now in Michael Blank's program. I live in Dallas and syndicate here.
Nice. Okay.
Yeah. So done a few syndications, but kind of working to scale. And so, I mean, really what I was hoping to get out of today, or the question I wanted to ask, it's a little bit of an ambiguous question, but kind of what are you seeing in the market, or how are you approaching the offers that you're making on deals now, in like the dynamic lending market, just a lot of uncertainty, kind of for the sake of your investors and stuff as you're syndicating, how are you approaching the offers that you're making on deals now?
I got to defer to Hervé on that one because we are a segmented company, Jonathan. That we all have our own superpowers. So Hervé
Sure.
is our market hunter, and he deals
Cool.
with brokers on offers. He deals on the financing side as well. So Hervé, how are we seeing things today's market today with regards to offers, the changing finance market? I'll let you two chat about that, and if I can throw some knowledge bombs in there, I will.
Yeah, no, thanks very much, Matt and Jonathan. Nice question, and nice to meet you here. I think what we saw earlier in this year were some sellers not wanting to give up on 2021 and the really high prices that other sellers were getting for their properties, right? And then as the winter and the spring and the summer went through, rising rate environment and things like that, they slowly started to readjust their realities and their expectations that they were not going to be getting top dollar for their properties, that they were not going to be getting people submitting LOIs 30 days before they were due at $50,000 above list price and so on and so forth. So a lot of that is now gone, which for buyers like us is a very good thing, even though we're dealing in a higher rate environment versus a year ago. But at the same time, we don't see the frenzy of buying taking place. We still see good activity. We still, as a matter of fact, I think there was an article in CoStar the other day about how commercial real estate sales is up on a year-over-year basis and whatnot. So, and there's still plenty to go. I've spoken with a lot of brokers. Their pipelines are very strong when they're looking at between now and year end. So when it comes to underwriting, Jonathan, we just are being more conservative in our underwriting. Obviously, not only with rent growth assumptions, but obviously with rates and things like that. So we're still very active. We're not scared of doing deals in a higher rate environment. We have submitted a lot of LOIs this year. Unfortunately, a good number have turned down, and they were turned down, which I think is it's a look into how strong the markets still are, that our offers were passed on because we got beat out by a larger offer. So there was a lot of that going on, and there's a lot of that still going on. I mean, when we are submitting offers, we have to be competitive. We have to be, pretty much at near or at that asking price in order just to be in the conversation, let alone potentially winning. Even still today, we may need to nudge up our original asking price just in order to win the deal. And then there is just more stuff after that, as you know, right? So that's where the market is. So the frenzy's gone. Nevertheless, still competitive. Be smart, be conservative with your underwriting. The double-digit rent growth that you were seeing, for example, I'm sure in Dallas last year and in 2020, you probably should not forecast that over the next couple of years, right? Because things have come way down, and you're looking at low to mid-single digits on rent growth in a lot of these markets that were last year, experiencing rent growth in the teens, some of them even in the high teens, and things like that. And still got to be realistic that there's some, supply and material shortages out there. So that's going to be a drag on your turns, specifically even more so on your innovation, labor shortages, contractor shortages, and so on and so forth. So you just got to be mindful of it. In underwriting, you're probably going to see lower IRRs and lower cash on cash returns, on deals that you're underwriting today versus deals that you were just underwriting 6-7 months ago, and things like that. So,
Jonathan, I got questions for Hervé on this, just like kind of elaborative questions, but I want to take a pause because I want to see what you got so far from what he just said. Thoughts, anything, any questions or things you'd like to offer so far on our underwriting or what we're seeing in the market?
No, I think that's really useful. I think it's pretty consistent with what I've seen is, people, at least here in Dallas, we look both Texas and Oklahoma, and both those markets are still really strong markets. A lot of multiple buyers putting in offers, either the opportunity to put preliminary offers or off-market deals are still best bet at winning deals. But yeah, I've noticed, I look at a lot of other deals too, either ones that I've, looked at potentially co-sponsoring or, deals that just interested in investing passively and, starting to see some operators who maybe they're a little too aggressive on the rent growth, maybe not conservative enough with where rates are going to go on their loan over the next 60 to 90 days. And so that's kind of where my concern has been putting in offers at.
Yep.
Mm-hmm. Yeah. It's, you got to be careful, right? And speaking of being careful, Hervé, with regards to, when I first got started, there was no such thing as money going hard day one, right?
Exactly.
And even this is even on bigger transactions. We started doing bigger deals. We were buying, I don't know if we did any money hard day one on DC-11. We did. It was very little.
Yes.
It wasn't much.
Yep.
So the money going hard thing, guys, for those watching, money, I know Jonathan knows what money going hard is, but for anybody watching who doesn't know what that means, all it means is there is a portion, or maybe all of, if you want to rock it out, but there's a portion of the earnest money that is non-refundable. Mm-hmm. Regardless, you walk away from the deal, fine, non-refundable. As long as there's not a breach of contract on either side, the part of the earnest money deposit is non-refundable, and it's called hard day one, right? I've seen that come down, and we've tried to negotiate that out altogether. EMD going hard day one, because I think that is a sign of the softening of the market, or maybe something where the market maybe got ahead of itself a little bit. Are you still seeing deposits hard day one, or the requirement thereof, Jonathan, or are you seeing that soften up on your side?
Yeah. So, like I said, we look in two different markets, Texas and Oklahoma. And so on Texas, I think a year ago, it was hard earnest money day one, no ifs, ands, or buts. And probably to win the deal, you needed more than 1% hard to really win. I think now we're seeing, at least what I'm still putting on my offers is hard earnest money day one, but we're including in our LOI a blind period option, which is typically a full business week where we can get in the property right before signing the PSA, and do, let's say, 90% of the inspections we're going to do. Check the roofs, check the pipes, all that stuff that could be big ticket items before signing on the line and putting down that earnest money. And that would not have been an option a year ago. So that's what I'm seeing in Texas. In Oklahoma, I'm seeing where, either there is an option for a short due diligence period or maybe just a small portion of the money being hard on day one. And so, probably just another step down from what we see in Texas.
Yeah. I don't know if it'll go away altogether, but I think that it's becoming, I've seen it drop down a bit. And if it doesn't go away altogether, that's okay. To be frank, Jonathan, we've been in selling situations where we're trying to sell to somebody and they broke the contract, and we ended up having a compromise on the EMD. We didn't get all of it turned over. So what I'm saying is I've rarely seen EMD get fully surrendered, even if it's money hard. Money hard day one is fun to say, but at the end of the day, you still got to litigate to get it, unless they decide they want to just turn it over. You need to, both sides need to sign to agree to turn over that EMD. If they don't, then a judge has to order it for it to get turned over, which is expensive and that kind of thing, right? So I don't, I think as fun as it is to say, it's actually very, very tough to enforce. Hervé, what are your thoughts on that? Because we've been down that way.
Yeah, no, I agree with you, Matt. I mean, it is tough to enforce, you know what I mean? And, brokers will tell you this is what you need to do in order to kind of, sweeten your position amongst the other offers, that are being submitted for this particular deal, and you go ahead and do so. But, like Matt said, you got to be careful because, the amount of work, that may need to be done on the property is not really going to be discovered until DD is done, right? And we're going through an issue literally right now with a property that we're looking to acquire, and there's a lot of work that needs to be done on the property, and we're really trying to ascertain a good estimate, and how much of that needs to be done.
There's a carve-out survey, right? Like, I'm not Jonathan, I'm sure for your contracts you do that too, but it'll say EMD is hard with the asterisk, and the asterisk kicks back to typically 3 items, right? Structural issues, environmental issues, or seller fraud, right? At the end of the day, you're not going to know until you get in. If half the buildings are caving in on one side, or if there's real, like if the beams are cracked or whatever it is, you're not going to know that until you get in, right? You're also not going to know if there's an underground storage tank or asbestos covering, half of one building, or potential environmental issue. You're not going to know that, and you can't hold somebody accountable to EMD hard for real deal-killing items like that. And the last one, of course, is fraud. The seller lied about their numbers, and I had some friends of mine that had a deal under contract down kind of sort of by you, Jonathan, in Houston. Did a deal under contract in Houston, and it turns out, Hervé, and you know who I'm talking about, our Houston friends that invest there, turns out the seller was straight up cooking the books. 100% cooking the books, showing the deal, showing financials one way to make the deal look a lot better. And when they called him out on it, he had no alibi. He backed. He's like, well, what do we want to do here? And he ended up having to refund their EMD. 100% had to agree to do it, even though it's money hard. If I'm basing my projections for financial performance based on something that's not true, then I gotta let it go, right? We got our next guest coming in here. What I wanted to ask you to do, Jonathan, is asking Nabiku, who's watching here. Nabiku, could you please send Jonathan a LinkedIn message, or Jonathan, you could just email us at livesessions@DeRosaGroup.com. Either way, we're going to get you a basket of free stuff of just some thank yous for joining us today. We are every Friday here at noon Eastern. So to your question about coming back in, love to have you come on as a recurring guest if you want to start talking about some stuff that you're seeing down there in the DFW market.
Cool. Fantastic. Yeah, sounds great.
All right, Jonathan. Thanks for coming on, man.
Good seeing you, man. Take care. All right. So I got another question here from my new friend, Elizabeth. There she is. How are you, Elizabeth? How you doing today?
I'm good. How are you?
I'm glad. Thank you for wearing the mask. I'm very COVID sensitive as well, so I didn't want to receive COVID from you on the across the StreamYard thing. So thank you.
No problem.
I think we're outside of 6 feet. So.
Yeah, I have patients back and forth, so my office is in New York, and it's still hot and popping out here. So
I know, I get it. I mean, one of our team members on DeRosa team here, a guy that works on the DeRosa team, was supposed to go with Hervé and I and our team to Bigger Pockets conference. Didn't make it because he got the Rona. He got COVID. So.
And it's such a great conference too. I was like, I wish I was there. My goal is to make it there next year.
You have to make it next year. Orlando, Florida.
Be part of that group.
Yes. Matt, Elizabeth is a boot camper of ours too. She showed up.
Are you?
Yeah, she was at office hours last night, so let's make sure we get her a bag of goodies as well. But she showed up at office hours, and it was office hours. Home was there. Peter C.
Oh, you better believe it.
Yeah.
All right. And Nabiku, let me just address that right now. Please send Elizabeth a package, a thank you pack for us here to get her information off the boot camp. Or Elizabeth, I see coming off of YouTube, correct?
Yes.
Okay. You just take this email address down, livesessions@DeRosaGroup.com. And have you joined our insiders page yet?
Yes, I am. Mm-hmm.
Okay. So Nabiku, you can hit her up on there too. But he needs
at DeRosa?
livesessions@DeRosaGroup.com. But anyway, that just goes to our VA, Nabiku. All he needs is your address and where to send a thank you package.
Awesome.
Cool. Okay. There, the 70% rule, the 1% rule, hold hands when you're walking across the street rule, don't wear white after Labor Day rule, Hervé. A lot of rules out there, right? On evaluating real estate. So Elizabeth, talk us through a little bit.
Yeah.
Happy to help you through it, right? What are you looking for? Again, 1% rule, they can be confusing. It depends on what kind of deal you're underwriting, but tell us more about what you want to get out of it, and we're happy to tell you which rule to go with there.
Yeah, so I was looking, so I'm looking into multifamilies up here by me in Jersey. And so obviously right now it's a really difficult market, especially for multifamilies. And so I'm gonna house hack
Okay.
it. I already have a multifamily rented out, so I just not need to move to another multifamily and live in that one because then the rest of it is already rented. So I was looking, I follow a lot of different groups and stuff like that. And I think I saw someone on Instagram and she was like, "Oh, this is really great app that'll break it down for you." And so I put all the numbers in and everything I had. And then at the bottom, it tells you if it's a good deal or not. And so it said meets criteria for a good deal for cash flow. It was good for I believe the 1% rule, but then not the 70% rule, and I was like, well, now I'm all confused. So it was like 2 out of 4 were good, and I was like, wait, now there's too many rules. And you can filter the criteria to adjust that. Like if you don't even want to look at the 70% rule, you can filter that out.
Yep.
So I did because I really wanted the deal, even though I didn't get it. But I was like, I'm going with the positives.
That's exactly what you do. When you want the deal, you change your underwriting criteria so that it meets the deal.
Make it look
every good real estate investor does.
Right. What return was the deal spitting out? Well, what return do you want the deal to spit out? Right. All you got to do is adjust
what do you want to make it do? Right.
Yeah.
Well, I'll tell you this.
Mm-hmm.
There's a lot of rules. There's a reason why they call them rules of thumb. First of all, that none of them are hard and fast and true. I can tell you that Hervé and I have bought deals that did not meet the 1% rule and do very, very well. We've done deals that did not meet the, whatever you said, 1%, 70%, 2% rule, all those things. So it's none of the deals are hard. None of those are hard and fast and true. I will say for a house hack, the 1% rule is sketchy because you're going to be living there, right?
Mm-hmm.
So the only way the 1% rule even thinks about working on a small multi-house hack that you're going to be living in is if you do a rent allocation for yourself, right? You can't just factor in what they're paying,
right,
and then look at the 1% rule on that. I mean, if you want to just look to see, I'll tell you how to really look at it for the 1% rule. Look to see what your out-of-pocket's going to be for while you're living there, right? How many units is it?
It was a 2-unit.
All right. So look to see, this is what they pay, their utility allocation, my utility allocation, what I got to pay. And if you're into the deal for less than what your housing cost is right now, check that box. If you move out and you lease it onto the market, does it cash flow? That's another box.
Well, that's the way I was analyzing it was like, okay, I'm not going to live there forever. I'm just using it as a house hack for now. And then it would, the cash out refi and then move on to the next property, right? That was the goal. So I was really looking at the numbers in terms of if I'm not the one renting, how much cash flow is this going to give me by these two these 2 units?
Yeah. What are you going in on low money down, like the 5% thing for homeowners? Are you gonna do that kind of thing, or are you gonna do 20, 25?
Yeah, that's what I was gonna do with the lender I have. He was gonna have me do like that was now going to be my primary residence.
Okay. What the whole refi to cash out, I don't know if you're gonna get if the market keeps going up, maybe you can refi to cash out, or if you're going to be adding more value during ownership by, I don't know, raising rents, adding more revenue streams, whatever it may be, then maybe you could refi to get cashed out. But I would be prepared for your 5% to stay in the deal. Is that okay? Is that gonna be okay?
Yeah, well, I wasn't gonna do that cash out now. Like my home now, it's on a good interest rate, like 3.2%, I think it is. And it was a 15-year, and that was a refi from like 2018.
All right.
15-year loan. So I'm like, I'm not gonna touch that. That's just staying just it is. So I was gonna get HELOC to do the rehab, and then just for the rehab on the new home.
Yeah.
It was gonna be a value add home. And then the conventional, primary mortgage for the new home because I was going to be living in that one.
So you're going to take a HELOC on your current residence, use that to rehab the duplex, I value the duplex, maybe refi to cash that back out.
Right.
Okay. Are you you're going to lease your single family home that you live in now?
It already is.
Oh, you don't live there now?
I don't live there. It's a multifamily also. It's a 2-unit. So I don't live there anymore. I'm actually right now because that was the plan, was to get another property.
Okay.
Ended up opening the medical office instead first. And so then that delayed my transition.
Okay.
But anyway, so now I'm ready to move on to the next property.
You're not planning on selling that first duplex anytime soon, right?
No.
Okay. All right. Here's my 2 cents. Okay. I'm going to give you another step in the process you want to do. Okay.
Yeah.
You want to take that property out of your personal name eventually. Hervé saw me spend way too much time talking about this at the workshop in Bigger Pockets about how to get it out of your name and into an LLC. In essence, and I have videos on this on YouTube, but in essence, you want to do a quick claim deed. Okay. You want to. The reason why you want to do this, I'll tell you why. You don't want this property in your name forever because it will eventually build up. Your DTI is going to start getting messed up, your debt to income ratio, because it's going to show up all in your personal credit reports. You currently have the property in your credit report. Do you own any other real estate or just the duplex, just the first duplex?
Duplex, yeah.
Okay. That's one. Then you can have two, right?
Yes.
You need to get that off if you're not going to sell it anytime soon, right? If you are going to sell it, then sell it, when you can, and you'll get to keep most, if not all, of the proceeds because it used to be your residence, right? But if you're going to keep it for the foreseeable future, then after you're done renovating duplex 2, okay, you want to refi duplex 1, and at the same table, quick claim it to a new LLC, and then right after, without even putting the pen down, you're going to sign the refinance documents to refinance it into an LLC. Then it's out of the LLC, and you have a mortgage in your own name.
In order for it to be LLC, I would have to refi it.
What's that?
In order to make it into an LLC, I have to refi.
You do, because what you're trying to do, it's moving it over to an LLC is a piece of paper, quick claim deed, right? The getting the debt out of your name is what you really want. You don't want that debt to show up on your credit report.
Oh, right.
So off your credit report. Yeah.
Right.
Here's Hervé and I own lots and lots of real estate in LLCs. If you run my personal credit report, all you see is the house I live in.
Nice. Okay.
Right? You don't see any of my apartment buildings and my other stuff, any Hervé stuff. You don't see any of that stuff. All you see is our primary residences. So the reason for that is the LLC is the borrower. I may be the guarantor, but I'm not the borrower.
Yes.
Right. So you get that off your personal credit report by moving the debt to the LLC.
Okay.
So you got to refi. You got to refi that. And what you want to do is, if you want to keep this game going for a little bit, buy a duplex, fix it up, refi it over to the LLC. Buy a duplex or buy anything 4 units or less, fix it up, refinance it over to an LLC. So that you don't end up, because you can only have but 10 mortgages in your own personal name anyway. You want to keep this party going, and you're going to hit momentum. You're going to keep this party going. If you want to keep doing this, buying your own name for low money down, and then fixing it up, then you want to keep doing the swap and drop thing.
Right. I guess I would probably do that then on the second home, just because I have such a good deal on the primary home right now.
Yeah.
And I don't want to have to start all over again when I have, like 10 years left, Yeah.
There you go. So bear in mind, and I'll bring it home with this one, Elizabeth.
Yeah.
You got the percent rules are, 1% rule, 7% rule, whatever. They're all just good rules of thumb. But they don't speak to your personal situation.
Right.
They're not going to speak to you living there. Right. So,
got it.
What do you got some thoughts?
No, man, I think you hit all the major points there. Now it's, the other thing with the LLC, Elizabeth, I'm sure, as you know, is for, legal purposes, right? Just liability. You want to protect yourself and everything else like that. So that's the other reason why you really want to go ahead and put those, into an LLC. But definitely protect yourself, especially even more so with the medical practice that you have, right? So protect yourself. Definitely.
Yeah, even the office I don't have under my name either. It's under an S corp.
There you go.
That's even more important because of medical malpractice issues and everything like that. Most medical professionals I know either have it all into a corporation, and they also, I mean, some of the you medical folks end up having to do craziness to keep things going and to avoid liability issues. They'll put things in their spouse's name. You know, like I got a car. Okay, I don't own that car. My spouse owns that car. You know?
Right.
Yeah. You want to come after me? I don't know. I won't own anything. You know, what do I have? Nothing. You know.
Yeah, for sure. Thank you so much, guys. That was so insightful.
You're welcome. Naviku, please reach out to Elizabeth on Facebook or email us at livesessions@roostgroup.com. Elizabeth, with your mailing information, and we would love to send you a nice little thank you package.
Thank you. I'm going to reach out to you guys also because I'm interested in syndicating also.
Sure.
I'm trying to. I don't want to leave all my eggs in one basket. So, you know, and I asked the question last night about the syndication also because someone presented to me like this offer, but she's a newbie with her partner.
You're the one who asked that question. Yes. I remember that. So
I'm like, if I put my money somewhere, I'm gonna go with this group who is doing the boot camp and like you know on the Bigger Pockets podcast.
Yeah, you do this, you know. Like we don't just talk about this stuff.
Oh yeah, no, we do this. We do this. It's all over. So you know,
we love to work through that way too. And many folks that learn from us also invest with us too. So
I have my audibles, so
thank you.
I'm all over it. There you go. You're all in. You're all in. Hopefully we'll have a deal to announce very soon. Obviously we'll let you know.
Naviku, throw in a signed copy of Raising Private Capital for Elizabeth too, please. Okay. So we'll get you a signed copy of my book. I know you already read, you're listening to the audio, but I'll get you the signed copy of it just for your bookshelf.
Appreciate it.
So you're welcome. All right. Thank you for joining us today, Elizabeth. Appreciate you. Keep us in the loop on how you're doing. Love to talk some shop with you very soon.
All right.
Good stuff. Take care. Guys, awesome conversation so far. Hervé, our chat feed's got a few questions we want to jump on.
Okay.
If y'all want to join us live, you're more than welcome to go ahead and you're more than welcome to go ahead and click the link that we posted here that you guys can jump on. So
got a question.
Right.
Got it. There you go.
Yeah. I got Jerry. That's a question I saw. Did you have another one, or did you see? Was this
no, that's the one I was looking at. That's the same one.
Cool. Investor in Baltimore, looking to invest in Trenton. Recommend some hard money lenders. Hervé, what do you think? We can talk a little more strategy there too, but easy way to find hard money lenders, Hervé.
The G.
Website. Hervé's got a website for you, Jerry. Right there. Get your pen ready, Jerry. Write it down. Right? You can find all the hard money lenders ever. Go ahead, Hervé. What's that website?
Yeah, that would be the google.com.
It's not. You don't say the. You just put just google.com, right? All joking aside, Jerry, let your fingers do the walking. There's a lot of good stuff out there on Google, and if you want to just look either on the Bigger Pockets forums, or if you want to just do a Google search for hard money lenders in the region, and just start doing your own due diligence through your own interviewing and everything like that. Or put a post out on Durosa Insiders. Maybe some folks can offer you referrals to folks. But hard money lenders will pretty much close your deal anywhere. They're not going to be state specific. You don't need a hard money lender that's in Trenton to do a deal in Trenton. In that. So all joking aside, Jared, just have a little fun with you. Just look online, maybe look some referrals. Maybe on the Durosa Insiders community as well to get what you need there. And best of luck in Trenton, man. I mean, it's a good market, it's all about management, it's all about who you have management, and there's very few good property managers in Trenton, so you're going to have to be some boots on the ground, maybe hands that involved in that, but it's still a good market. It's a good cash flow market. You just got to make sure you select the right tenants, do the right renovations, don't chintz, and that you should be able to get some folks that are willing to stay long-term that'll produce good cash flow for you. So, guys, I'm going to pivot with my man Hervé real quick. I'm going to show you guys a tool. I'm going to brag on Hervé a little bit. I'm going to show you a tool that he developed, okay? And this is a little bit of a thank you. And Jerry Diaz, you're welcome, by the way. This is a tool that Hervé developed that I want you guys to check out. And it's a free tool. You guys can go and grab a copy of it off of our website, which is right there. There it is, the market tool, guys. Take a minute and click on that, and you will be very grateful you did. Let me see if I can share my screen. Share screen. There we go. There it is. All right. Everybody check that out. Here's that. Look at that handsome man.
Oh, who's that good-looking guy right there? Come on.
Handsome cat, man.
What? Oh, my goodness.
So here's the deal, guys. Go to this website. Again, this is yet another free thing. Do we ever charge for anything, Hervé? Sometimes we do. But hey, this is yet another tool for free. Go to growthgroup.com/market tool. Fill out that little form right there, and you get your free market analysis tool. Okay. And this is a tool for analyzing markets across the U.S. Let me show you guys what it looks like here. And Hervé, why don't you, when I'm pulling it, can you talk a little bit about what your intention was here for developing? There it is. Tell us a little bit about what we got here, and what your ideas were when you developed it. Talk us through it.
Yeah. So no, I appreciate it, Matt. And have to admit, the idea was Matt's idea and whatnot, and I started.
I just said, "Hey, everybody, I want something to develop markets." And you came up.
And here we are. Poof, here we are. So the market analysis tool, folks, really just talks about a lot of the metrics that we use in really evaluating a market and deciding, is this a market that we want to invest, that we want to go ahead and acquire properties to extend our portfolio. And so not only do we discuss the metrics that we follow, but we also share with you in this market analysis tool the resources, the websites where you can find that information, regardless of the city that you are looking to invest. As you can see there on the front column, the first column is the metric, things such as population growth, median income, job growth, so on and so forth. And relative sources, the websites where you can find information on population growth in the city. So for example, if you're trying to decide if Tampa, Florida is an attractive city to invest, and you want to find out the population and population growth, median income of Tampa, you go to World Population Review, type in the city's name, Tampa, you're going to find a lot of information. It'll even show you a 10-year graph of how the population has grown in Tampa over the years. They'll show you the actual number, the population number, median income, what percent of households are owners versus renters. So it's a really, really neat tool. And then Matt's idea was, hey, let's go ahead and score how these cities fare relative to how they compare against their state score, and then of course the overall national score, for U.S.
The population growth of the United States is 2%, and the population growth for North Carolina is 5%, but the population growth for Charlotte is 10%. Then Charlotte beats the national score, and Charlotte also beats the state score. And you guys see up here, scroll up here, it gives you a scoring tool and how to do it and what the point allocations are. It's 5 for beating the national score, and it's 10 for beating the state score. So Charlotte would get a 10 on the national side, 5 on the state. No, I'm sorry, 5 on the national side, 10 on the state side, for a total metric just for population of 15 points, right? And if you're lazy like me, then you can click on. Then we made these clickable buttons right here, right?
Oh, goodness, this is really.
How about that? I don't know. You have to cut and paste. You have to move anything, right?
Okay.
Put your cursor right over that, and you click on it, and it takes you right to that website. So you can just be lazy and pull it up here and let it click right through. Then you score your market, Hervé, median income, job growth, crime. What is CPI, GDP? What is that, real quick?
All right, so you got the consumer price index, you got gross domestic product. So obviously this is the economic data, again, not only for your city, but for the state on a national basis, right? So these are the metrics that the government uses to track inflation, to track government spending and things like that. So how high is inflation in the city that you're looking to potentially start acquiring in relative to the state in which that city is located, and the national average or whatnot. And again, you're going to get a certain number of scores, whether if it's beating the state and the national average on inflation, real GDP growth and things like that. Now, listen, folks, it's not 100% perfect. It's a great platform, starting platform. You might need to do a little bit of additional research on your side to get a little bit more information. But I think
they shouldn't go and just buy a deal just because your scoring sheet says they should, Hervé?
No. This is just kind of used as a starting point, right? So it should give you a good gauge that you are heading in the right direction if your total metric score is scoring very nicely relative to the city and the state averages. So you are on the right path. You're on the right path, but you still have some homework to do. You'll be buying Class A.
What you want to do, guys, is you want to look at, you want to try and find a way to talk yourself out of doing a deal. And if you can't do it, and you keep moving, you keep analyzing, you keep unwinding it. So if the market makes sense on this sheet, then keep going in. Find more data. Find out find out who the vendors are that you want to work with in that market. And then if that continues to work, you find deals, you analyze the deal, and if the deal's immediately, a loss or doesn't make any fiscal sense or whatever, then you can exit the deal. But the more you dig in, you want to be that conservative contrarian, trying to find problems. If you find them, you can pull out. If you can't find any problems and you keep digging, then maybe you might actually have yourself a deal. So really, this is more of like an exclusionary, excluding tool to try and knock deals off the box. And if you can't do it, then keep digging, right? Here's your scoring right there, scoring metrics. If you total all the way up to 40, that's probably does not qualify as a target market. Because think about that, guys. That means that, look, you got 1, 2, 3, 4, 5, 6, 7 right there. That means that you couldn't beat the national score pretty much across the board. You certainly couldn't beat the state score. And that just means the market's just not above the herd. That's all, You got to have a market that sticks out, that's doing better than the national average or better than the state average that it's in. That's an overperformer right now to do well. High score could be 100, perfect score of 100. That's great.
Right.
But there you go, guys. Well,
I would throw in this, right? Don't go ahead and toss out a city simply because it falls in that middle range of it being a marginal market, because sometimes a market is marginal before it becomes a hot market, right? In which over time, its population growth will be accelerating. We've all been hearing about the entire, migration developments that have been taking place, not only on the East Coast, but also on the West Coast. So states benefiting. And over time, you're going to see the population growth of some states really start to pick up as that migration growth continues, right? So perhaps a lukewarm market right now looking to be a hot market. And when you start to see that population growth increase, guess what's going to happen after that? That job growth in that same market's going to increase. So it could be that market is on pace to become a hot market because there are positive things taking place right now. I'll just use one right now as an example, open up the tea leaves a little bit, but let's say, for example, Matt, Greensboro, North Carolina. All right, arguably a very lukewarm, kind of middle of the road average market for the longest times. But guess what? There have been some really big time announcements that have taken place in Greensboro this year that I think is slowly going to skew it from that lukewarm market to a hot market. And largely there's been some migration taking place to Greensboro, even specifically within the state of North Carolina. And then you've had some companies, big companies like Toyota, Boom Supersonic, announcing some big plant developments that are taking place over there. That's for a lot of job growth. So that's an example. Yeah,
well, it's called being a market expert for a reason, guys. And this is Hervé's best take on metrics sheets to measure a market with. But also, you got to have your ear to the ground.
Yes.
You got to be the first. If you're the market expert, you got to be the first in the know on maybe changes that are coming into a market. And we love that Piedmont Triad market because there's a lot of great indications. So Toyota building a battery plant there. Boom Supersonic is the future of aviation, and they're going to be, building airplanes that can get us, or they could have got us to San Diego a lot faster. Right?
That's so true.
Yeah.
A couple hours. Exactly. I would just say two things, Matt, for folks. If you want to dig a little bit more on your city, two more sources. Most cities have a local chamber of commerce website. Go to that one. Tampa Chamber of Commerce, Greensboro Chamber of Commerce. Go to that local city's Chamber of Commerce website. They always talk about businesses moving in, jobs moving in, developments going on, properties, mixed use, and so on and so forth. So go to the local Chamber of Commerce and also go to the local newspaper of that particular city that you're looking to potentially invest in. Obviously, the business section, they also are going to be talking about businesses that are coming in, contracts being signed, jobs, and again, real estate developments, what's going on in the local universities and the local hospitals, and so on and so forth. So
you got to be an expert, and Hervé's our expert on markets. And when we present a deal to investors, they're not going to say, "Hey, what's the IRR on your deal?" first out of the gate. They're going to say, "Well, first of all, why your company? Why should I invest in you guys?"
Right.
We can answer that, but why that market? Like, why Greensboro? Okay, let me tell you why. Right. Then maybe why the deal, right? But it's typically not the first, second, third, or fourth question out of an investor's mouth is, what's my cash on cash? What's the IRR? They want to know like more, like take me here, more macro, and then bring me into the deal. So you got to be able to present those that market data. Getting off of this, guys, DeRosaGroup.com/market tool. Check it out to grab a copy of that. Thank you, Hervé, for working with me to create that product. We already had good feedback so far for those that are using it.
Great to hear.
Yeah, man. So that's what we got, man. That's our live session for today. Hervé, final thoughts? Any? I don't know if you want to bring it home on anything else here. We had a few deal analysis questions. We got an email here from a student looking for some information on deals, but I believe we addressed it, and that was just about like how to calculate the MAO, how to determine underwriting criteria for a deal and everything like that. And before we go, I'll just make sure that investor gets taken care of here. Hervé, when you look at a deal, how do you figure and how do you play in the MAO? Let's start with what MAO stands for, and where do you take it from there?
So the MAO stands for maximum allowable offer. It is, obviously the term speaks for itself. It is the maximum offer that we will provide on a deal, right? So if a deal has an asking price of $10 million, and after we do all of our underwriting, we come up with an offer price of ourselves of $9.8 million, the maximum, that will be our maximum allowable offer, $9.8 million, kind of a thing. We'll say that, obviously, we could do it at 9.6, 9.5 kind of a thing. Let's say we submit that offer at 9.5 million, but internally we know, and then of course the seller is going to want to negotiate. They're like, well, can you come up to this? We'll know in our minds that the maximum that we can go to is 9.8 million, even though we submitted at 9.5 million, right? So, there's a lot of different variables that go into that maximum allowable offer number. Not going to go over all of them, but it's standard underwriting and taking into consideration what we are going to forecast to on rent growth, on expense growth, how much CapEx dollars are we going to need to renovate this properties to benefit from the rent bumps that we believe that we can get at this property, right? So those are some of the bigger variables that are going to make an impact on that final number. There are a bunch of others when you start talking about utilities and payroll and your property management fee and so on and so forth, and different income lines besides rent, pet fees and Amazon lockers and so on and so forth, right? But at the end of the day, those are going to be some of the bigger line items that are going to have an impact on that number. Obviously, your borrowing costs. We're in a rising rate environment. We all know about it. What's going to be our cost of capital on this deal? How much returns we need to give to our investors on a preferred return basis, right? So we take all of that, we put it in our pretty spreadsheet, and it spits out truly, again, here is the maximum number that we can offer on a deal. We typically do not go out with that maximum number to the broker. We come in with something a little bit less, knowing that most likely the seller is going to go ahead and counter. So as they counter, we know again in our minds what our maximum number can be.
Well said. Well said. So thank you for that, Hervé. And guys, that question came in email to us at livesessions@derosagroup.com. If you guys can't make these sessions, and you're either watching the recording or you're watching right now and you want us to address something next week, Email us at laughsessions@DeRocherGroup.com, and we'll pop a quick answer onto these sessions for you. Hervé, man, good stuff. Heck, I was about to wind it down, Hervé, but I just can't help helping people. I got another one come in from Hector here. Real briefly, can you talk about mezzanine finance? I am concerned that because of the estimated insurance cost, that may require a longer time to convert to the deal positive. Yeah, I mean, mezzanine finance is really what it's like. It's a fancy way of saying second. It can be a fancy way of saying second mortgage, or it could be a fancy way of talking about bridge debt, which is a way to get us from A to B. But typically, mezzanine, Hervé, correct me if I'm wrong. When I hear mezzanine, I'm thinking like a position that's behind the firms, correct?
Yeah. That's what I think about it as well. Yep.
Okay. The estimated insurance cost may require time to convert the deal to positive. Insurance is a big thing these days, man. I mean, I remember when we first got started, $200 to $250 a unit per year was an easy, like probably, conservative number. And everybody's looking at the deal right now where the insurance is what, like $600-700 a unit per year. A lot, three times what I'm used to.
Yeah.
So Hector, I need to get more clarity in how mezz financing is tying in with insurance. But I think that you've got to just find a way to increase revenue, decrease expenses somewhere else. Insurance kind of is what it is. I wouldn't go messing with insurance for the rest of trying to reduce it, but I would come in and say, okay, what can I do to bump revenue, to get NOI up, and what can I do to drop expenses to get yourself out of that mezz finance as soon as possible, so you can get yourself over to nice fixed rate debt without a mezzanine sitting behind it. Hervé, any thoughts?
No, I think you hit the nail on the head. But those are the, as you know, the variables that you really want to move around so you can, increase that NOI, right? The different rent income line items and lowering your expense line items.
Okay. Now you're talking about something different here, Hector. You said having to raise additional cash after the deal closes. That's either that's like a cash call. That could be what you're talking about. Where if your underwriting said we're going to raise $3 million for this deal, and you go raise that $3 million, you close the deal, and then insurance costs kick in or other types of requirements kick in that require you to take another bite at the apple with regards to equity. That's typically called a cash call. That's going back to your investors and say, hey, you guys committed $3 million, but now I need more. And so the way cash calls work typically is whoever puts more money into the deal maintains their ownership position. Whoever does not put more money into the deal may end up getting diluted, meaning like losing some of their ownership stake because they didn't continue to pony up to keep the deal moving. Cash calls are necessary. They're necessary evil. No investor wants to do it. No general partner wants to do it. But sometimes they have to happen. The reason why they're necessary is because you want to at least have a means for the limited partners to put more money in the deal, just so the deal doesn't go under and they don't lose their investment, right? If the deal needs it. So it's a necessary thing you have there. You talk about rising insurance rates and those kinds of things too. That all could play into why you might need to do a cash call on a deal. Everybody, any thoughts on cash calls? Or kicking in more money from the equity after the deal closes?
Yeah, no. Excuse me, nothing on that on cash calls. Where I was thinking when he said raising additional cash after the deal closed, man, I was thinking about CapEx. Someone was asking me that question earlier this morning during office hours, where, okay, let's say your deal needs $1 million in CapEx for interior and exterior renovations. Do you need to have that $1 million that day of closing, right? And you don't. Knowing that you're going to be spreading out that spend over probably several years. You're not going to be renovating everything day one of possession. You're taking over the deal on both interior and exterior and so on and so forth. So if you don't have all $1 million of that CapEx at closing, let's say you have $400,000 of that CapEx at closing, and you're going to give that to your property manager, they're going to start doing their renovations right away. Then what about that $600,000? When does that get raised? When do you start the raise for that? Matt, you may have some insight to that specifically, right? So
it puts any structure, right? I don't like raising money for deals after you close. I don't like passing a hat around again. So we do it one of two ways. If I got CapEx and construction that I need to do after closing, for work that we need to do after closing, what we'll typically do is we either borrow that money down from a bank, something called a bridge loan, which should kind of fallen out of favor, but they're still a vehicle, right? And that's the bank lends you that money as you go. You do some work, they pay you back. You do some work, they pay you back. That's how bridge loans typically work. Or you can do what we've done as well, is you go and raise all that additional capital you need, which is maybe what Hector's alluding to there. As you go and raise the amount of money you need for construction, it just sits in the bank in cash, and you draw that cash down as you go, and you've got your cash you need to buy the deal, your cash you need to renovate the deal, and some cash for operating reserves for operating the deal, and off you go. You just raise all that all at once. If you've got good capital raising muscles like we do here at DeRosa, you can raise all that at once and have it just sit in escrow and draw it down as you go.
That's right.
That right? Okay, good.
You got it.
Good question, Hector. Thank you. Guys, next Friday here at noon Eastern. If I can get my man Hervé to join me again, I will. If not, we'll bring some other guests in, or I'll just come in by myself and I'll chat with you. Either way you guys want to do it. Fridays at noon Eastern, live sessions at DeRosaGroup.com to email your questions. You're welcome, Hector. Like we got free stuff we're giving away. We got free swag that they can earn, Hervé. They can go out and just grow it, grab your Market Hunter tool. Just one more time, guys, mention that. It's in the comment box of all of our feeds right now. To go and click the link, and for free, capital F free, go get that Market Hunter tool that Hervé developed for you guys to help you guys evaluate markets you're considering. Okay? Hervé, that's all I got, man. You got any final thoughts?
No, man, that's it, man. I appreciate it. This is a great week altogether. Some really, really smart questions this morning on Insiders, on Chat with Matt. So, I'm, looking forward to it. Everyone have a great weekend. Listen, one of the main takeaways that I had being in Bigger Pockets, talking to folks that have started their real estate journey versus those who have not yet, but they're thinking about it, and it seems like they're dragging their feet a little bit, is that no one was smarter than anyone else. No one had no more money than anyone else, is that they took action. They took action. I'll show you a quick story, Matt. One of our boot campers, right before he took off on Tuesday evening, after he was leaving the boot camp, he came up to me just before he was heading for the airport. This is our DJ, and DJ came up to me and he said,
on my flight.
"Oh, he was on your flight? Okay, so I don't know if he shared with you, but at the conference, he raised $125,000 off of lessons that he had learned through our boot camp. I gave him a high five. I was so pumped up and excited for him. And I said, trust me, there's so much more becoming. I said, keep building on it. Keep building on it. It's an example.
Keep an eye on that DJ, man. That DJ is going places.
He's going places, man. He took action. So I was so pumped up for him. So just take action, guys. Absolutely.
Yeah. No, that's great. He took the red eye with me on my plane to the plane I was on. No, not my plane, but the plane I was on to Philly. And then he was going to lay over in Philly for a couple of hours and then lay over to Tampa. So I don't envy him.
He was pretty excited. He was really, really excited. So I was like, way to go, my man. Keep going.
Yeah, I'm happy for him, man.
That's great.
Cool. All right, guys, listen, next Friday, join us live. Hector, if you wanted to chat more about that deal, I know you got more questions there. Just email us at livesessions@DeRosaGroup.com, and I can answer those questions live on our next week's feed. Or you can join us live. Click the link that we put out there, Hector, next week, and you can join us live on that one. So we will see you then. I can tackle more of your questions then, guys. I appreciate you. Hervé, thank you. Have a fantastic weekend, my friend. I'm going to do a little more birthday weekend celebration stuff for myself. I might have a birth month,
That's right. Yeah, still a lot of days left in the month of October.
It's not a birthday. It's a birth month, right?
Month. Exactly.
Jeff Holst, our man in Puerto Rico.
There we go.
Yeah. Welcome, Jeff. Good to see you, man. Good to see you. It's good to see our man Jeff out there in Bigger Pockets as well. Be prepared. Get ready for another video interview from Jeff talking about investing, Hervé, in Tanzania. That's on the way. Video coming down the pipe on our YouTube channel. Stay tuned for that one. That's on the way out.
All
okay?
Right. Sounds good.
Cool.
Have a good one.
See you later, everybody. Good being with you, man.
Yep. Bye-bye.